Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Mathew. Now, this show aims to get you actionable insight on everything related to mutual fund schemes, whether it is on the fixed income side, that is investing in everything from gilt funds to liquid funds, to investing into equity funds. And we discuss all the categories within the equity category as well. Today, we'd like to focus on thematic or sectoral funds, and this is something that gets a lot of attention. There is a significant amount of money that the industry is handling within this category as well. But there are several options within this, and the question is, how do you allot money or allocate money to one or multiple themes? Now, we are going to be discussing one scheme in particular at the start, and that is in fact the Quant ESG India, or the Quant ESG Equity Fund, because if you look at the last 3 years, this is a fund that has outperformed by a very large margin. I'm talking about CAGR gains here. The question is, why has it outperformed, and why have ESG funds by and large not really caught the attention of Indian investors? And we'll also talk about thematic and sectoral funds at large. To talk about this, I've got Raghvendra Nath, who's the MD of Ladderup Wealth Management, and also Vishal Dhawan, who's the founder and chief executive officer of Plan Ahead Wealth Advisors. Thank you so much to the both of you for joining in and for speaking to us. Let's start with a conversation, as I mentioned, about the Quant ESG Equity Fund. 38 or 37 odd percent, if I'm not mistaken, of returns, 38.7% since inception, over 32% over the last 3 years CAGR. Raghvendra, what explains this?
So Alex, first of all, while the name suggests ESG, it's a diversified fund, so it can invest into small cap, mid caps and large caps. And when I was looking at the portfolio of Quant ESG, I could see that almost 45% investments have been in small cap and mid cap stocks, and which has actually rallied quite a bit in the last 9-10 months or so. And even if you look at individual stock exposures, things like Reliance Industries, which is the highest exposure in Quant ESG, or stocks like Sun Pharma and Jindal Steel, all these companies have benefited for a variety of reasons over the last 3 years, and that actually accounts for the performance. So while ESG is the broader theme, and I'm sure the fund will have around 50-60% stocks which are focused on ESG, but the larger reason for outperformance has been the sectoral plays as well as the stock level plays in the fund.
Okay. I also want your view on this, Vishal, because Quant has a strategy that I think a lot of people have spoken about. It usually involves a significant amount of churn, and that has helped them to beat the market, beat the peers also in quite a few categories. What is your reading of this particular scheme, though?
So I think there are a few things that clearly have helped this. One is, of course, the whole active stock selection and sectoral selection that they have done. So if you look at, banking, pharma, commodities, 3 of these sectors have been big beneficiaries. But I also think there's a little bit of timing benefit that they've got, especially when you look at the since inception data, because they started off in May 2020. This was just after the sharp COVID correction that had happened. And therefore, when you look at the data from a since inception perspective, part of it is coming from there. And I would therefore say that, we need to separate out the part of the gains that have come from what has worked well for them, which is the sectors that we spoke about, and the part which comes from since inception just because they got their timing a little right in terms of what was happening. Otherwise, in general, clearly, like you mentioned, ESG investing has not really taken off in India. And part of that has been because there's been this whole global concern around greenwashing and what it really means, and how many of these funds are true blue ESG funds in the way that one would like to define them.
Interesting. Let's talk about that before we head into a more detailed on sectoral and thematic. Then Raghvendra, I want to come to you on this one. Some part of it, of course, Vishal has just spoken about, but ESG has not taken off. And particularly from the institutional perspective, I think there's not much holding. Is that the reason?
Yeah, so globally, when you look at ESG as a theme, majority institutional investors have been the one which have been investing in ESG primarily. And retail generally, is more concerned with the outcome. What kind of returns are they going to get? They are just not too much bothered about where the fund is going to invest. Whereas institutional investors are a little sensitive about, global warming issues or polluting issues and all that. And therefore, many institutions, in fact, have a mandate not to go beyond companies which score high on ESG. For instance, Norwegian fund is one of the largest funds in the world, and they invest only in ESG themes now. So in India, because institutional participation in the mutual fund industry is not very high, most of the money which their equity funds receive are from retail investors, individual investors, I mean. ESG theme has not been such a big focus.
Okay. Now, I do want to talk about just the last 3 years and what I kind of did, and the reason why I sent this topic to you is because I was curious about the performers over the last 3 years and also over the last 5 years, right? And some of these schemes, of course, are much older than that. But the first filter that I put was a 3-year period. And those funds that have at least a 3-year period, I've looked at since inception. And as Vishal pointed out, the Quant ESG scheme is one that launched just after COVID. And so the start point was quite beneficial. The other schemes that have done well are iPru Commodities, ABSL PSU Equity, DSP Healthcare, and there is also an iPru Business Cycle Fund that has done well. I'm actually curious about why you think these schemes have done well as well. And I'm pretty sure it's difficult to look at each of these and delve into portfolio strategies. But by and large, do any stand out to you? Vishal, I'll come to you first.
So clearly, I think one of the themes, and I think, while constructing mutual fund portfolios, it's obviously very critical to think about sustainability when you're doing thematic investing, unless you're typically looking at it as a very sort of tactical play and just deciding that I'm going to move out and come back in and do that again and again across sectors and themes as time passes. But assuming that you're a reasonably long-term investor, I think sustainability of themes is something that you need to think about very, very carefully. And that's where I believe something like healthcare, for example, is a theme that can be taken advantage of over periods of time, even if it's had a great performance in this narrower time frame that we're looking at. In contrast, something like commodities or something like PSUs will tend to be much more cyclical in terms of how they behave. And investors have to have the ability to deal with large drawdowns, because some of the thesis around why you are investing and buying into these themes may not be sustainable over longer periods. I think PSUs are a great example of this, where there's been a lot of excitement in the more recent past about PSUs and the performance obviously, always leads to some of this conversation. But fundamentally, in a business, you do want the majority shareholder and the minority shareholders to be aligned in terms of thought process. And if your majority shareholder requires dividend and capital, most of the time, while your minority shareholders are okay with you reinvesting back into the business if the opportunity provides, we think there's a fundamental disconnect between the two. And therefore, I think one needs to break up the performance into sustainable versus possibly just, shorter term themes which may not play out over longer periods of time.
Absolutely. And before we get into some more details, and I would like to speak to you about infra as a theme, about banking and finance as well. But before we get into that, I also want to talk about concentration, because we were discussing the portfolio of Quant ESG Equity, and nearly 20% is in Reliance Industries as well as Geo Financial Services. I'm trying to understand also the selection. Of course, perhaps we can get the fund manager on to try and understand how this fits into ESG. But what do you think about concentration when it comes to these sectoral and thematic players? I'll come to you on this one, Raghvendra.
So Geo Financial, which is a pure play financial services business, can fall in ESG. Most banking and financial services, because they have nothing to do with environment or social issues, generally should fall into ESG. So Geo will definitely, but Reliance, considering they a large part of their revenue still come from petrochemicals business, which is one of the fossil fuels. Is most of the world wants to move away from fossil fuels and move towards green energy. Definitely that doesn't fall in the ESG theme as such, other than those two components, which are the telecom and retail. So probably fund manager is, because there are those two other components which are also now significant part of Reliance Industries, has chosen to invest in Reliance in the ESG fund. But yes, concentration is always a risk in any mutual fund, and we have seen in the past when things don't go well, the drawdowns can actually kind of damage clients' returns. But that's obviously a fund manager's call in terms of what is he thinking about next 1 or 2 years or 3 years for these stocks. Geo, probably, still the reason for investing in Geo probably could be because it's in comparison to other NBFC plays that we have, like Bajaj Finance, Geo is still a little undervalued. And generally, when you think about Reliance as a group, you think about disruption, what they have done in retail or telecom, and therefore people are expecting that they may do some bit of disruption in the financial sector as well, though the strategy is still not very clear to the market.
Okay, a quick view on the scheme then, and if you have people that are contemplating investing in it, what should they bear in mind? And then I'll come to Vishal on the same question.
I think, rather than investing in themes like ESG, where there are not enough stocks or enough things available. India, most of the companies in India don't even basically secure a ESG score, for instance. I think it's better to invest into other themes.
Okay, Vishal, any thoughts here?
So I echo Raghvendra's thoughts here. I think, buying thematic funds on past performance, I think it's a very risky strategy, because what you could be doing is entering a theme at exactly the wrong time when you're making that decision. Whereas, you should actually have entered that maybe in the past, which is what is reflecting that strong performance.
Point. I still do want to talk about a couple of sectoral plays after this next break that we have to take. So do stay with me, gentlemen, and viewers. We'll be back and we'll be talking about themes like infra and power, as well as the banking and IT sector funds. So do stay tuned. Welcome back. You're watching the Mutual Fund Show, and we're having a conversation about sectoral and thematic funds. On this conversation, I've got Raghvendra and Nath as well as Vishal Dhawan. Now, we have spoken about the Quant ESG Equity Fund and a few other sector themes as well. But I do want to talk, gentlemen, about infra and power, because for obvious reasons, these schemes have outperformed over the last year in particular. And if I look at, therefore, the last 5 years, then the first few themes or the first few schemes that have performed on a CAGR basis over the last 5 years are Quant Infra Fund, you have Bank of India Manufacturing and Infra Fund, you have ICICI Pru Infra Fund, you have Invesco India Infra Fund, you have Nippon India Power and Infra Fund. So the first 5 are from the infra space. The question is, does that carry forward as well? And investors that are holding on to this, how do they approach it? Because usually a sectoral bet is a tactical allocation. Do you take money off the table as well? Vishal, first you.
So I think the interesting part about infrastructure is that, a lot of investors have also had not so good experiences in the past. So you would recollect between 2006 and 2008, there was a frenzy around infrastructure funds. And a lot of them, then never ended up making money for many years after that. So I think for investors who have experience in the financial markets in India, this is at the back of their mind as well. That, in the past, it's been helpful for me to take my money off the table if things get too exciting or too hot. Now, in order to answer this question well, it's important to look at the category of infrastructure funds. So there are basically 2 types. One is what is diversified infrastructure funds, which include, the infrastructure sectors, but also include financiers of infrastructure. And clearly those which are, the core infrastructure industries, industrials, materials, utilities, etc., those areas have been very, very benefited in the last year or so. While what has happened is over the last 5 years, the performance has been fairly broad-based, whether you bought a diversified infrastructure fund or a core infrastructure fund. So the way to think about it is, what do I want to participate in? If your intent is to participate in infrastructure as you understand it, X the financiers of that, then you'd probably go to an infrastructure, core infrastructure fund. Now, once you've made that decision, the question is, how do I do this? Because I made so much money over the last 5 years. There's obviously been a reason for it. You had COVID. The way spending needed to happen is it needed to get spurred through the government. Its private sector spending is only just starting to pick up. So there is a lot of history to this, which one keeps in mind. And therefore, I would tend to believe that going forward, because valuations in this space are very expensive, you would want to be careful about adding more money to infrastructure funds just on the back of the last 5 years' performance. If at all you want to do it, you'd want to go into an SIP and really have a longer term horizon, saying that infrastructure will play out over a period of time, and I will participate in that story, though there will be these downs that will accompany that as well.
Okay, and we'll talk about how much of your portfolio should ideally go into these in just a bit. But before we do, Raghvendra, I'm curious, do you also agree with this? Incremental money, be a little careful. Some of these schemes are red hot, or rather the underlying is red hot. And an extension to that, one theme that has relatively underperformed, or rather 2, is IT as well as banking in the recent past. So if you are looking at a tactical bet, then should you look at these options?
Yeah, so I think, no, I agree completely with Vishal. And generally, when you see returns which are, let's say, 3-year return and 5-year returns, when 3-year returns are 30% CAGR and 5-year returns are 20% CAGR, that's, of course, not the normal. And therefore, there has to be some adjustment which has to be done by the market. Because ultimately, in the longer term, and that's what we have seen always, whenever you look at a little longish period, let's say 10 years or 15 years, the earnings growth is going to get reflected in the share price growth. And generally for infrastructure companies which are large, they have leveraged balance sheets, They are large dependence on government expenditure for their growth, and therefore, if the government slows down the infrastructure spending, the companies also basically will face the consequences. When you're looking at infra as a theme, you need to keep that in mind, that the last 5 years is not the normal returns. The normal returns could be more in line with maybe 12 to 14%, 15%, and not 20-30% that we have seen. And therefore, it's good to be cautious right now, because the markets have been in a kind of a frenzy. As far as the other two sectors that you mentioned, banking and IT, yes, of course, banking sector during this last 1.5 year has not done as well than as some of the other segments of the markets. And when we look at the valuations of the banking sector in general, if you look at, let's say, price to book, which is a common measure which is used to basically evaluate banks, most of the banks other than ICICI are quoting at under 3 times, and therefore there is a room for some amount of enhancement in valuations once the normalcy kind of returns. So banking as a theme in any case is a very long-term theme in India. India is a developing economy. We are expected to grow at 7% real rate of growth, 11-12% nominal rate of growth. And banking generally will be one of the drivers of that growth. And as the retail consumption grows, the credit space in any case on that side will also kind of continue to do well. So banking as a sector, it has a very, very long legs. And therefore, if somebody wants to basically, be exposed to banking with a mindset of remaining invested for 8 to 10 years, it's a good thing to do.
Okay. By the way, viewers, take a look at the bottom of your screen. You'll see that number. If you've got a specific question on anything that we're discussing right now, or in fact anything related to mutual funds, then don't hesitate to write to us and we'll try and get your question answered. Now, let's get into the nuts and bolts of it, right? Because we've talked about multiple themes and we've talked about how some of this portfolio construction works. But Vishal, the argument that is made in some situations, we'll take that in a bit. But I want to come to the nuts and bolts of the thematic fund conversation, which is, should you invest in it at all? Because if you look at the Nifty 50, 38% odd allocation towards financial services. There is a considerable allocation towards IT as well. So if you are playing some of these themes, they exist in both passive and active strategies across the board. Should you invest in thematic or sectoral funds, Vishal?
I think that's a very relevant point that you make, that, portfolios, whether they are diversified or passive, or active or passive, are going to have a large exposure to many of these themes already. And therefore, you need to be very convinced that there is something which is happening in that sector, which makes you want an even more concentrated portfolio to that theme. And therefore, I think one of the guidelines that we would suggest to viewers is that, even if you want to make a thematic bet, assume that you're very convinced about some story, do it to not more than 10% of your portfolio, and ideally try to allocate to 2 themes rather than a single theme. Because what we found is, and banking is a great example, if you go back to about a year and a half back, the entire conversation was about how banking is the most attractive theme. And now with, NIM compression worries, now with, deposit growth worries, etc., you're seeing the conversation change, even though banks may be fundamentally very strong because of their asset quality. So I think there is a need to be very cautious about how you want to build it if you have an existing portfolio already.
Okay, fair point. And I'm assuming, Raghvendra, you also have a view of 10%. This is the stated case, I think, for equity portfolios, right?
Yeah, generally, I think, the fund managers in any case, basically, one thing that we need to understand is that in an NAV-based approach, fund managers will always try to be in the sectors which are in vogue. Okay, they'll keep over-allocating to sectors which are expected to do well. So generally, when you find any fund, you will find that the themes which are in vogue always find a little higher allocation than the other themes.
Fantastic.
So some bit of that sectoral play is happening through the diversified funds in NDTV.
Right. Fantastic. Thank you so much, gentlemen, for joining us on this conversation on sectoral and thematic funds. Viewers, remember, if you've got questions on any of those themes, then write to us on the number, on anything else as well. But that brings us to the end of this particular edition of the Mutual Fund Show. It's been a pleasure bringing it to you. Do stay tuned. This is NDTV Profit.
In a remarkable shift, the Indian government's strategic transition from being a net importer to a net exporter has propelled the country's defence sector to new heights. The Ministry of Defence marked a historic year in 2023, witnessing a surge in defence exports, reaching an unprecedented 16,000 crores in the financial year, almost 3,000 crores more than the preceding year, and defence production also scaled to new heights. All eyes will be on the budget to get some more dope on what the industry and the sector expects. We have with us three very, very interesting and impressive individuals joining us on the show. Ashok Atluri, CMD of Zen Technologies, Arun Ramchandani, Executive VP and Head Defence, and Amit Mahajan, Director of Paras Defence. Thank you, gentlemen. You're all three, in a way, are industry representatives and also represent defence and know the sector better than any of us do. My first question, and Ashok, I'll start with you. With heightened tension in the Middle East and on the heels of the Russia-Ukraine war last year, will the current geopolitical setup have any weightage or impact on the nation's budget for defence as we head into budget 2024?
So I think it's going to seriously impact. I mean to say that, two things that came out very well out of this whole, fiasco in Ukraine or in Middle East. The most impenetrable country where ragtag soldiers on hand gliders could take over the country for 6 hours. The thing would be, the lack of preparedness. And the first is that they were not prepared well. They did not work out all the scenarios, and they almost, Iron Dome, etc., went for a 6-hour. So the preparedness is one thing that will come out. Combat readiness will come out very well as a hype thing, this budget. And the second is a complete lack of defense against the drones. A solid defense against drones is another thing that will really come up in this budget. So these two things are the, are major factors that are going to determine the next course of action for many countries: combat readiness and